Let's see. Make this big.
Boom shakalaka.
Boom shakalaka. What is up, everybody? I'm joined today by Mark Moss. What's going on, Mark?
What's up, guys? Thanks for having me on, Crypto Love.
Yeah, it is a pleasure. So today we are going to talk about what is going on in crypto. Because right now, we were just talking briefly before, people are kind of bummed, but like, crypto is potentially the huge future. So we're
Yeah,
going to talk about that today.
yeah.
Yeah.
I think people just don't realize where we're at in the cycle, and they just expected too much.
Mm-hmm. And
Let's talk about that.
yeah, and that's why I'm excited because you understand these cycles of this new technology. So I guess before we all get started with this, people who watch my channel know me. They may not know you. So could you tell us a little bit about yourself?
I'd love to. So, I started investing in 1995 in real estate, which was at the bottom of a 4 year bear cycle in real estate. And I started my investing career in real estate at the bottom of a bear market, and I made a ton of money in real estate. Did really well because I started at the bottom of a bear market and rode all the way up. I started investing into internet stuff in the late 90s, and I started my first internet company in 2001, which was at the bottom of the .com crash. And I built up a pretty good internet business empire, if you will. I have a Fortune 500 exit, sold that, and I've been investing in real estate and technology ever since. I invest in what I call non-traditional investments, so oil and gas, gold and silver, anything where I can get better returns than traditional stock markets and mutual funds. This is boring for me, but yeah. So I think having the experience of really investing out of two bear markets have given me a much different perspective into this market where we're at, as well as investing and building a business through the internet. Run up, crash, and then through that bear market cycle as well. So that's kind of a bit about me. I talk about broad market, macroeconomic, political, fundamental things on my channel, Market Disruptors. So if you're into that kind of stuff, it's on Market Disruptors, where really we're looking at global shifts and trends to try to pick up different investment ideas and different investing theses, right? So it's like investing with a trend, paddling downstream. And so when you can find these global shifts and these global trends, I believe it makes your investing way easier, way more profitable.
That's awesome. I mean, that's a pretty cool history. And you've been investing for like 20 years, over 20 years. You've been through bear markets before. Because for a lot of people in crypto, this is kind of their first bear market experience, and it's not fun. I don't think anyone enjoys bear market, right?
It depends, right? So some people do, and as a matter of fact, some people, some of the biggest, highest level investors in the world,
Mhm.
actually cause bear markets so they can get better investment opportunities. So, like George Soros, for example, will go in and actually topple countries so that he can go in and buy stuff up at bare bottoms prices. So if you understand how cycles work, and you have a long enough range perspective, then you can use those to your advantage, right? So knowing again, right, like with the real estate market, when I started going in and buying in 1995, or going in and buying in the real estate market in 2009, 2010, I mean, there was just a massive profits that would be made. Of course, you're going to have to wait 5, 6, 7 years for those markets to turn, but that's where real wealth is made, starting in bear markets. So a bear market today, I mean, it's depressing because maybe you heard or maybe you saw in 2017, you bought something and 2 months later it doubled or tripled, but that's just not reality. And so today it just requires like a different mindset. But if you're willing to take your positions today, in a couple years from now, I believe it's going to be life changing.
Mm-hmm. Yeah. So that's awesome. Now, a lot of what we're going to be talking about kind of is how crypto is the same as other investments or different than other investments. So give us your idea. I mean, how does crypto compare with other investments?
Well, so the thing that you have to realize when you're investing into cryptocurrencies, whether that be Bitcoin or these decentralized cryptocurrencies and altcoins and whatnot is that it's a lot different than any other investment that you might make. So, if you're used to investing into stocks and you're looking at, equity and price to earnings ratios, or you're investing into bonds with yields, or you're investing into whatever, each market is a little bit different, and the crypto market is definitely different. For one, the market's not really there, so there is no cash flows, right? It's completely different. So really, the way that I look at it is it's a brand new technology. And so really, if you step back, right, and look at the macro picture, really we're investing into a new technology that I believe is revolutionary. I believe it's the biggest revolution that we have ever seen as humans. For the first time in history, we have a technology that's going to allow us to have this massive shift. And so it's a technology. And there's been 5 new technology cycles over the last 200 years. So going back into the 1700s, we had steam engines, we had railways, we had automobiles, we have internet, and now we have the blockchain or it really wasn't internet, it was really telecommunications. And now we have this blockchain. So there's only been 5, and what happens is each one of those cycles follows like 4 main phases of adoption, and they create enormous wealth. And what it does is it transfers wealth from one group of people to the next, and it's always a different group of people. So, people want to go, oh, they're rich, they keep getting richer. Well, it's not really the case. So every new technology cycle has a new group of people getting rich. So, for example, the group that got rich in the railroads were not the same people that got rich in the automobiles, and they were not the same people that got rich in the internet space. So that's why it's an enormous opportunity. It's this enormous wealth transfer. And, for those of us that didn't get wealthy in those other cycles, it's a chance for us to get wealthy in this cycle. So we kind of have like a second chance. And I think, at least for me, having been through other 2 bear markets, but really a technology cycle. And I was a little too young to really know exactly what I was doing, but now I do. So now I'm just like, I'm excited, and I'm licking my chops.
Yeah. So you mentioned those 4 phases that everything goes through. I think the second phase was frenzy, but can you go through those different phases and kind of maybe potentially where we are in the crypto development cycle?
Yeah, for sure. Let's pull that up. So first of all, these are deep subjects, everyone. So we're going to go through them pretty lightly. They're deep subjects. I actually have like a 4-part video series. So if you really want to dig in deeper, you can go to my YouTube channel and check that out because it's not something that we can just brief over. But to answer the question, the 4 phases really, it starts with like the hobbyists and tinkers, right? Where you kind of have it's what we call the eruption phase. So that part's kind of like the Big Bang. Like all of a sudden, boom, somebody invented this this new idea, this new product. These developers have this big imagination to solve this problem, and all of a sudden, boom, it was created, right? And it was typically like it's a paradigm shift. So we've been looking at this industry and a way to do things, and all of a sudden now there's like a whole new way. There's like a whole new technology, and it kind of creates like this direct threat to the existing markets that are there, and it kind of happens. It kind of happens without a lot of attention because it's just kind of guys like working in their garage, so to speak. And what happens is that after that happens, then people start to notice it and they start going, "Wow, this technology is kind of interesting. I think it can do a lot of things." And then they start investing a little bit of money, and then more investments come in and more investments come in. And then we go into what you had mentioned, which is like the frenzy phase. And that's when like financial capital comes in, and every technology boom has seen this, where you start having so much money pile in that the money gets ahead of the technology. In the automobile boom in the 1900s, in the early 1900s, we had the first kind of automobile. Henry Ford created the assembly line, which was a new technology at the time. And within a couple of years, we had 150 auto manufacturers. The money jumped in. Everybody wanted to start a car company, and everybody jumped into this new technology, but the market wasn't there. Nobody was really, there weren't enough people buying cars at that time. The adoption cycle hadn't happened yet. And so we have that frenzy phase where money jumps in, and we call this like a time of speculation, because none of these assets are really usable. We can go back to the internet age and look at the same thing where like in the late 90s, like the famous one, pets.com, spent billions of dollars and went bankrupt, not because it was a bad idea. Today, lots of pet stuff is being bought and sold online. But back then, there was just nobody online buying anything. There was nobody online, period. We had dial-up. You couldn't even use the internet.
Yep.
And so it was all driven by speculation, not actual adoption. And then what happens is then, of course, the market crashes. And then we kind of go back through a synergy phase where the technology finds like a market fit. And then eventually we get to like a maturity phase. Those are the 4 phases.
So I want to ask you, because when I was looking through those 4 phases, I was kind of thinking, well, we're past the people working in the garage. I forget the name of that first phase, the early adopters. Then the frenzy. I was curious your thoughts on it. Like the frenzy that we just had in December and January. Is that the frenzy, or is that kind of like the preamble to the frenzy? Because even though there was a frenzy, there wasn't that much institutional money getting in. So are we still in... I mean, just your opinion, and obviously I just have to say this because I forgot to say it in the beginning. Not financial advice, guys, not telling you what to do with your money. Obviously, pause the video, read the description, don't be a dummy. But, yeah, your opinion. Where do you think we are?
So it's not just one big cycle. There's like multiple cycles within the big cycle. And so what happens is if you look at any chart or stock, you'll see that the price goes up and down, up and down. It never goes in a straight line. And so we typically think of volatility as like price moving up and down, and like the more it goes up and down, the more volatile it is. That's not really the technical definition of it. Technically, it's kind of measuring like how risky an asset is, but really we think of it as when price goes up and down. And so that whole cycle falls right in line with this, right? So what happens is the way that I look at volatility is it's really the difference between perception and reality. So going back to like crypto as an example, or even we can look at in the internet space, what happens is, the perception got ahead of reality. Yeah, Bitcoin was there and the technology kind of works. And we can see that it's going to create this revolution. And then money started pouring in, the price started going up, 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 and it got crazy, right? Almost 20,000. And the perception was that crypto is here and it's taking over the world. The reality was it's not really ready yet. It's not ready for adoption. We have tax issues that need to be resolved. We have regulation issues that have to be resolved. Merchants aren't even accepting it. We have all these reasons. So the perception was here, but the reality was here. So what happens is that's when you want to sell. Then what happens is all of a sudden reality pulls perception back down, but it overshoots to the downside. Well, as price went down to here, the reality kept moving forward. Today, the reality of the technology is way further along than it was a year ago. Now we have massive scaling improvements, all kinds of things. We have regulatory clarity that's happening. We have lots of on-ramps and infrastructure that's being built. So now the reality is here, but the perception is way down here, and that's what creates an opportunity for us to buy. And then we know that eventually the perception will start catching back up to reality, and it will overshoot it again. And then it's going to snap back, and it's going to come back down. And so we're looking for the difference between perception and reality, and that's when we know we should be buying and selling and getting in and out of the markets.
Yeah, it is really interesting that you make that point, because the whole cryptocurrency space is so much better than it was a year ago, just in terms of development, and yet the price is a fraction of what it was. I mean, we were looking at like $1 trillion market cap almost. Now we're right around 100 billion. It's crazy.
Yeah, and it's just that difference of perception and reality. And we see this across lots of things. So like, for example, Chipotle, one of my favorite places to go eat. They had something happen with their salad and people got sick. And their stock took a massive hit, right? Massive hit. And so the value of Chipotle plunged overnight. But like nothing changed in their business model. The category they're in, which is like healthy fast food, is a really fast growing category that I think will continue to expand. They're continuing to grow market share. And so the business itself is still great, but perception of the business changed because people got sick. But we know that as people are quick to forget, and as soon as they forget about that, it's going to snap right back. So that created a short-term buying opportunity in Chipotle. And that's kind of the same thing where we're at here, where everybody's so tired of this bear market that good news alone won't move it. Now people are like, I need to see it before I believe it, and so eventually it's so that's what happens. It's going to slowly consolidate, slowly start going up, and then eventually we'll get back into that frenzied market cycle again, which gets me back to your original question, which is, did we see the frenzy out of the four phases? And I think we'll see those four phases play over a couple times. And so I believe we had the retail frenzy. We haven't had the institutional frenzy yet.
Mm-hmm.
And the institutional frenzy will be a lot bigger.
Yeah, for sure. Because, I mean, I know you've gone to a lot of conferences recently, and I go to conferences as well. And it seems like it's always, they're always talking about institutional investors. They're always talking about security token offerings. So, like, those things are definitely going to be the next phase, potentially.
Yeah, for sure. So, I mean, from a technology standpoint, what this new technology can do is amazing, and that's from only what we can see, right? So, like, as humans, we're not really capable of predicting the future, because all we can do is imagine a better version of what we have today. So, like, oh, we have cars, in the future we'll fly in cars, right? Like, but really we can't imagine new things because we don't have the building blocks for them. So, like, an example would be, like, in 1997, email was like the killer application of internet technology. And we thought, oh, instead of like having to go to a store, we could buy something online, and like we kind of imagined like video conferencing, kind of like what we're doing today. But we had no idea that we'd have like a car hooked to something called a cloud, using something called social media, like navigating us around traffic. Like, we didn't know that. And of course, Uber or like Airbnb went on to be like massive, massive successes, but we could have never envisioned those because we didn't have the building blocks. And so what we can see that blockchain technology can do today is amazing, but we really have no idea the full impact that it can make.
Mm-hmm. Yeah, it could be. I mean,
and I think like the other thing is with technology, like even with the internet, it's like we're really, I mean, we're like 10 years into it right now. I mean, we're 10 years into the iPhone. It's been around 20 years, but since everybody's been using it like in the palm of your hand, 10 years, it's not that long. But I think it's really just getting started. Like social media is really just starting to change the world, like fundamentally change the way that business is done, and, self-employment, small businesses working. So it takes time, and that's why I said earlier, I think a lot of people are salty. We talked about, right, in this market, just because they're impatient. They saw those quick gains, but they don't understand where we are in the cycle, and that it just takes longer for technology shifts to happen. Like my grandma, she's dead now. She died 2 years ago, but like she never got on the internet.
mm-hmm.
My mother-in-law, she still goes to the grocery store and writes checks.
Mm-hmm.
But my kids, they'll never know anything different, right? So it's like it takes generations to kind of make those massive shifts.
Mm-hmm. And even with iPhones and with social media, I mean, those are somewhat established. I think with Bitcoin and cryptocurrencies, we still don't even have a really great use case for them yet. I mean, obviously payments, but there's not a very, very easy way that anyone can go and do it yet.
Well, I think it starts with like, so you have to have like that one killer application, and I referenced email. So in the internet space, in the late 90s, it really was all about email. That is what got people starting to like log on a regular basis to check their email. And that's kind of what got them into using the technology, and then it could move from there. And so I think with this blockchain technology, the killer application for right now is money. It's currency. And then that will get people using it on a regular basis, and then we'll scale from there. But I think like I talked about like looking at like big macro trends, and so as an investor, I mean, there's kind of a couple ways to play it. One, obviously, you can trade the market and you can go in and out of positions, or two, you can like look for investments where you can buy and hold, 6 months, 1 year, 3 to 5 years, etc. And so you're just looking for those trends within the trends. And so I had another video, I talked about this pendulum. And basically we have like a 40-year cycle where the entire world, and we can trace this back for thousands of years. On a 40-year cycle, the world goes from a we cycle, which is like a centralization, a we cycle, to a me cycle, which is a individualism or decentralization cycle. And so what's interesting is, like I said, you can trace this back thousands of years. in World War II, we left the individual, and we've been swinging towards centralization. And we can see that where now this whole world has gone to globalization, the UN, the EU, etc. But now the pendulum is starting to swing back the other way. And we can see that because the whole world is rejecting that, right? We saw Brexit. They're saying, we don't want to be in the EU anymore. We want to be a sovereign country. Italy did it. Paris is doing it right now. The United States elected Donald Trump. We don't want the establishment. So the whole world is rejecting centralization and moving to decentralization. So that's a massive 40-year shift that happens on a clock. And interesting enough, at the exact same time, we have a technology that's doing what?
Yeah, allowing decentralization. Yeah.
So imagine when you can take a 40-year global shift and put a technology shift or trend with it together at the same time, how powerful that is. And then you look for little trends within that trend, right? So, for example, the U.S. Supreme Court just made a law that states can do online gambling and gaming again. And it's really hard and expensive to do online gambling because of software and all these things. But blockchain technology can fix that. And so now you have a trend of global decentralization, a smaller trend of technology like blockchain, and a smaller trend of like online gaming. And you add all three of those trends up together, and like that's a pretty powerful place to start investing.
Yeah, probably putting a lot of ideas in people's minds for sure.
I'm not going to tell you which ones, but I'm trying to teach people how to think, not what to think.
Oh, okay, yeah. Because they say, like, if you give a man a fish, he can eat for a day. But if you teach a man to fish, he'll spend the rest of his life getting drunk on your boat. I think that's...
I don't know if I've heard that version, but I like it.
Yeah, so, I mean, that's pretty exciting. And just, like, the aspect that I really like is just the globalization, the decentralization. So, I mean, I remember when I was a kid, my grandparents traveled a lot, and I had a pen pal in Zimbabwe. And so I would, like, write a letter, and then, like, months later, I would get another letter. But nowadays, I mean, you can conference call anyone anywhere in the world. You can send money anyone anywhere in the world. You can travel all over. So, like, it's looking more towards some type of giant globalization as opposed to these little pockets of people.
Yeah, it's pretty cool what the technology's done and how it's changed the world. And really, what's happening, it's really a continuation from internet, because before the internet, it was all about everything was like generalization. So like, advertisers had to advertise on TV. And they could say, well, if they're watching this TV program, they might fit this area, so I'll advertise on that program. But that's so broad. And what the internet has done is the internet has continued to create these niches, right? And so today, you can't like broadly like advertise or market like that today. Now it's like, hey, I'm advertising to 40-year-old men that are divorced and like poodles and live on this continent, right? Like it's that narrow. And the internet has all allowed us to find like our people and our tribes. And I think that continues to further that decentralization, right? We're moving away from the group.
Yeah, I would love to see what product they're marketing to 40-year-old divorced men who love poodles.
I'm trying to come up with something strange. I don't know.
I would love to see that. So then it brings me to kind of the title of what I made this thing. So is crypto a good investment? That's like something that a lot of people search for. A lot of people are curious, especially now, because I mean, I talk with people on the street all the time about Bitcoin and cryptocurrency, and they're like, oh yeah, isn't that thing that crashed hard? And I was like, yeah, like the best performing asset class in the past 10 years. It's gone up from nothing to $3,500. So, but a lot of people's perception is that it's not great. So is crypto a good investment?
So first of all, like what is good?
Mm-hmm.
So good to me is good to you, different than good to you, right? So if I was looking for something I could put money in today and pull twice my money out in 30 days, it's probably not a good investment.
Mm-hmm. Why not?
Right. At the end of the day, also like the number one rule to investing in anything is asset allocation. The number one rule to success with investing is asset allocation. Ray Dalio, the number one money manager in the world, that's what he says. That's what I follow.
And what does that mean?
I have another video on asset allocation if you want to learn about that. But that's the number one rule. And so what that means is that the smartest guys in the world are smart enough to know they don't know. So, because I don't know what's going to happen in the future, I'm not going to put all my money into stocks or one stock or all stocks, right? So some in real estate, some in bonds, some in treasuries, and some in cryptos. I'm not going all in crypto. What if Bitcoin goes to zero? I don't want to go all in, but there's a very strong chance it's not going to zero, and I want to make sure I have exposure to that upside. So I think it's definite, and we always look at risk versus reward, and so I think that there's way more upside, way more reward than downside risk. And so I think it has to be in anybody's portfolio. I don't think you should go all in by any means. As a matter of fact, you probably want to keep it as a small allocation. You don't need a lot because it's so explosive. I mean, some of the picks that I have in my portfolio that my members follow. As a matter of fact, to give you hard numbers, in January we closed out 20 positions that had been open for about a year because we're trying to make room. The market's shifting, and where we want to be investing this year is different than we were the last 2 years. So we closed about 20 positions out. 18 of them had made a profit. 2 of them never hit a profit. Of the 18 that we closed out with profit, the average return was over 2,000%.
Yeah, that's
and so so that means like $200 can turn into like thousands or tens of thousands of dollars. So you don't need a lot of money. I would just make sure you have a little bit of exposure at least. And that way, if it goes to zero, you're not wrecked. And you put $200 in, you put $500 in. And I mean, if you lose it, whatever, if your $500 goes to $100, like how sad will you be? I definitely don't recommend going all in and getting wrecked on anything. As a matter of fact, I talk about real estate investing, and this is how I've learned everything. They say success is a horrible teacher. We learn from our failures. And so, in 1995, I started investing into real estate, and I started on the side. I continued doing real estate. I was doing like little fix and flips, and I was doing like small houses, and then I started doing big houses, and I started doing like commercial projects. So it kept getting bigger and bigger. I had businesses going on and other investments, and I sold my businesses. I told you I had a Fortune 500 exit. Well, maybe I didn't say that, but I did, and I put it all into real estate. I was all in on real estate. I thought I was like the smartest guy in the world. I basically turned $0 into about a $20 million portfolio. And by 2008, I lost everything. And not only did I lose everything, I was millions of dollars in debt.
Yikes.
Why?
Yeah.
Because I was 100% in on real estate.
Oh, damn.
If I would have only been 50% in real estate, I would have lost half my money, and that would have sucked. But at least I would have still been alive. But I lost everything. So never do that. But I think, back to your question about crypto, I think to not have any exposure to it is a big mistake.
Mm-hmm. Yeah, well, that's a lesson for sure. You definitely gotten something from that. Oh my goodness.
Yeah, and that's really a big piece of why I have the Market Disruptors channel, and I teach things like asset allocation, because I mean that wrecked me, and I have other friends that were in similar situations that have never recovered from that. And I want to help other people prevent doing that same thing, because nobody should have to do that. You just need to learn some education,
Mm-hmm. Yeah, for sure. So another thing that I wanted to talk about was one of the articles that you sent me mentioned that crypto could potentially be $100 trillion market cap. Now, right now, it's $100 billion market cap. And I've heard people speculate about it being like replacing gold as digital gold, having like a $5 trillion market cap. But this is the first time I've seen $100 trillion. So I want, yeah, I know, I like it. But I wanted to talk about that, and I'm sure a lot of people want to know. I'm sure a lot of people would love for it to be $100 trillion market cap. So where does that come from, and what is that?
What happens is, with every new technology, 2 things happen. First of all, each new technology cycle has a shorter adoption period. So when the telephone came out, it took about 70 years to reach 80% adoption. When TVs came out, it took about 50 years to reach 80% adoption. But when VCRs came out, it only took about 20 years, because TVs were already there. See, so it was easier just to put the VCR right on top of the TV.
How about Laserdisc?
I don't know that number off the top of my head, but
I don't think that ever hit 80% adoption.
and then the internet did it in about 15 years, partly because it used the phone lines from the telephone.
Mm-hmm.
right? So each technology kind of paves the way for the next technology. But what's also very important is that each technology actually pulls or steals value from the cycle before. So what I mean by that is, like with the TV, there was a lot of value created on television networks, advertising. But when the VCR came out, it scaled faster, but it pulled value. So now instead of watching network television, I'm watching tapes. It took value away.
Mm-hmm.
With the telephone, the internet launched on the telephone, and it pulled value from the telephone. I don't need telephone service anymore. Now I use VoIP.
Mm-hmm.
Right? So each technology steals value. And so what we do is we look at, okay, this blockchain technology, how will it scale faster? And really what markets will it pull value from? How big are those markets, and how much value do we think it can take? And it's no different than if I was in Silicon Valley and someone said, hey, I want to tell you about this new idea I want you to invest in, and it's called Uber. And I said, well, there's no such thing as that. I mean, I don't even know how that works. Like, how would I even value a company like that? That makes no sense. I don't even know how to value that. Well, what I would do is I'd say, well, what you're trying to do is disrupt the taxi and limo industry. The taxi and limo industry is currently whatever, $600 billion. So if you could capture 20% of that market, you would be worth this, right? So you have to back into it. So that's kind of what we do. So we look at blockchain technology, and we look at like what markets is it going to disrupt, how big are they, how much money can it take, and then we add that up, and that's kind of how we get to 100 trillion. I broke it down all in actual real numbers, so you can kind of understand that. I broke it down into like different market sectors of like how these coins kind of compare to these market sectors of other things and whatnot. But basically, we're talking about new and emerging markets. So there's about $12 trillion in new and emerging markets right now, and those markets are going straight to crypto, right? So think about like in a lot of these markets, like we're talking about, like in places like in Africa or Asia, they never got phone lines. They never made it there. But today they're using cell phones, so they skipped right over phone lines and went straight to mobile phones, right?
And so not only that, but they can't get bank. They don't have bank accounts, but they can download a wallet and all of a sudden be into crypto. So
they're skipping straight over the banking system and going straight to crypto, right? And so you pointed out a perfect case, and that's exactly what's happening. There's 2 billion adults in the world without access to banks. 2 billion. So just in that alone, there's $12 trillion. So they don't have access to banks. They're probably going to use crypto. They already have mobile phones. There's $12 trillion right there. So, maybe they can grab some of that. They can grab half of that, $5 trillion out of there. The next is institutional investors. So, we talked about, you mentioned security tokens. Security tokens on their own aren't like super sexy, but if you understand, and we're not going to get into it on this show, but the way that the stocks work, I mean, stocks have been around for like 100 years. So obviously there's no technology there, and it's a very messed up, broken system. Putting stocks onto the blockchain makes perfect sense. It's like the best fit in the world. They have to go there. They 100% will go there. And today there's $70 trillion of securities. So I think we'll easily see $10 to $20 trillion come over just in the next 5 years alone. So 12 trillion, 70 trillion. I mean, it starts adding up pretty quickly. Then we have like new asset classes. We're talking about like exchange traded funds, like ETFs, things like that. We have, ETFs are currently about 20% of the stock market, which I said was 70 trillion. So that's about 20% of that market. So there's probably another 10 trillion that can come over from there. Digital gold. So you've heard probably that Bitcoin is like digital gold. So the reason, why do people own gold? Why do nations, why are all the nations and central banks of the world adding to their gold supplies right now? All the central banks have been increasing gold supplies over the last several years. They know something that we don't know, or they don't want you to know, I should say. So we hold gold because it's really the only form of sound money. It's a chaos hedge. If the world goes to hell, we have gold. And the central banks are adding some, and you probably should add some too. I know I own it. But Bitcoin is like digital gold because it basically it has a lot of the same reasons as to why we'd want to own it, be out of the banking system, can't be seized or manipulated, right? Those things. But it also has advantages. Like I could send you digital gold right now, but if I wanted to send you a bar of gold, it would be very difficult. So that market's $8 trillion, and so if we figure like, well, the same reasons why people buy physical gold is the same reason they buy Bitcoin or digital gold, you'll probably see a lot of that, $8 trillion coming over.
Mm-hmm. Right? Yeah, and also a Bitcoin over gold. The see, Bitcoin has a fixed supply, whereas gold has an increasing supply, and then also it's the ultimate bug out money. So you can just take your ledger and stick it up your rectum, and then just hop on a flight,
or just remember your private key.
That's not as fun. So.
Yeah. And if you get hit in the head, you won't forget it.
Right, exactly.
Just don't cough.
Exactly. Oh, good point. Good point. Yeah. So yeah, I mean,
we have offshore alternatives. So like right now people put their money in Swiss bank accounts or in the Bahamas, so that's out of the reach of the government.
Mm-hmm.
Well, if they put it into Bitcoin, it's out of the reach of the government too. And so right now there's about $30 trillion parked in these offshore accounts. And like I said, it's the exact same purpose, but there was a a notorious, I guess, Russian mobster like a year ago, and he had like $500 billion frozen in his account. Not 500 million, sorry. 500 million frozen in a Swiss bank account. So it was in a Swiss bank account, and that was like his bug out money.
Mm-hmm.
And now the government froze it, seized it. So Bitcoin, putting it in Bitcoin is better. And right now there's 30 trillion just there. So we could capture a lot of that $30 trillion market.
Mm-hmm.
And then tokenizing the world. I think we're already seeing hotels become tokenized, art become tokenized, things like that. And there's hundreds of trillions of dollars there. So I think if you look at like conservatively grabbing 10-20% of each one of those markets, 100 trillion is actually pretty easy to get to.
Yeah, that is mind blowing. Certainly possible, but mind blowing all the same. Wow.
Yeah.
Mm-hmm. Cool.
So the question is, which ones are you going to buy to hold for the long term to take advantage of the 100 trillion? And so that's of course that's the $1 million or maybe the $1 billion question.
Mm-hmm.
And that's where you just really kind of have to understand these macro trends and try and invest in the trends within the trends. Obviously, it requires a ton of research. You got to keep your mind open, watch all the videos, listen to the podcast. Really, what I do is how I've kind of learned everything. Everyone always wants to know like what book they can read. When I lost all my money in 2008, I learned a principle that said money's like energy. It doesn't disappear, it transfers. And so what that means is when I lost my money, someone got my money. And that made me pretty mad. And I'm like, this is never going to happen to me again. As a matter of fact, I am going to be on the receiving end of all the wealth transfers from here on out. And so I had to really invest in my own education. And for the last, whatever now, it's been 10, 12 years, I buy financial newsletters. So like I can't spend the time required to be an expert in the gold industry. So I spend $3,000 a year on a gold newsletter, and once a month they send me like a digest of everything that's happening in the gold industry, and I absorb all that research in one an hour or whatever. And I have one for the oil sector, same way, and I have one for China opportunities because China is an emerging market. I want to know about China. And so I'm able to learn and keep an eye on all these markets. And yeah, it's costing me $3,000, $2,000, $5,000 a year, but that's an investment. It's making me hundreds of thousands of dollars. So, it's all going to happen really quick. There's going to be a massive wealth transfer, and you just got to decide if you want to be on the receiving end or you want to be on the giving end like I was last time. But that's no fun, so I don't recommend that one.
Yeah, definitely. Yeah, so I want to be on the receiving end too of the wealth transfer, obviously.
Well, so I mean, you hold Bitcoin and you are, right? So the banking system, the traditional systems are going to be losing money, and it's going to be flowing to people who are buying these assets in advance.
Cool. So anyone watching, if you guys have questions for Mark, because he is a smart dude, and now's the time to ask him questions. If you guys have questions for him, feel free to post those. We'll take a second to wait for some questions.
All right.
So are you headed any conferences coming up?
I mean, we just got home from Miami. I was out there in your neck of the woods. So did that. Was that a week ago. I'm not doing a whole lot of conferences right now.
Yeah.
I'll get to the big ones. I mean, I was going to a lot, like you said before, so were you.
Mm-hmm.
But I think, the industry has slowed down a little bit in a sense where there's not so much new stuff to go out and see and touch all the time.
Mm-hmm.
That doesn't mean the industry is slowing or stopping. As a matter of fact, like there's more innovation happening today than there was a year ago, but you just don't have all these companies popping up and stuff like that. So I'm just staying home. I'm building. I'm working on Signal Profits. I see you have the link up there.
Mm-hmm.
So if anybody wants to know more about what I'm doing, what my portfolio looks like, what coins I'm in, or you want to know like which coins you can buy and sell today for profit, check out that link that we have up right there, the Signal Profits. All my research, I write like super deep research reports, like 10-page research reports that go in there every month. The portfolio is being tracked. I do interviews with all the founders of the companies, etc. So you can check that out.
Mm-hmm.
But I see some questions coming in.
Yeah, we got some questions. So, first one I see is how many Bitcoin do you need?
You don't even need one. I mean, you can buy a fraction of one. You can buy 100 millionth of one. So you can buy $1 worth, and you can buy however much you want. There's no reason why you'd have to have one. And with investing, there's especially in these markets, I mean, there's no minimum. It's all about percentage return. So I'm trying to make a 10% or a 50% or 100% return, and 100% is 100%. Whether that's on 1,000 or a million, it's still a 100% return. So there's no minimum. You just start with where you are.
Yeah. So I think that question was like, how many Bitcoin do you need to be rich, or something like that? Because when I first got into Bitcoin, a friend of mine told me if you have one Bitcoin, you'll be set for life. And I was like, oh, that's pretty interesting. I'll take a look at that. Because there's more millionaires in the world than there are Bitcoin. There's like 35 million millionaires. There's 21 million Bitcoin.
There's I mean, and by the time it's all mined with what's been lost, maybe there's going to be 16 or 17 million. There's not even enough Bitcoin once they're all out for all the millionaires in the United States to own one.
Mm-hmm.
Think about that. All the millionaires in the U.S. couldn't even own one.
Mm-hmm.
And I own a lot more than one, so I've already taken more than my fair share. And I think ultimately it comes down to like this game of like musical chairs where everybody's going to want to sit down. There's not going to be enough chairs. But, trying to like predict a price is really difficult. If it does what I think it could do, I mean, it could definitely be well over 6 figures per coin. And I think ultimately we'll be talking about them in Satoshis and not like full Bitcoins.
Yeah, absolutely. A book list for 2019. So in any investing or any books that you think would be helpful for people who are into this stuff.
I think if you're into like Bitcoin and understanding kind of the movement, the revolution, what's happening, but really more importantly why we need it, not what it is. I'd encourage everyone to look past what it is and think about why. And so I think maybe probably the best book to start with would be the Bitcoin Standard by Safety. That book is amazing. He did a really good job of going through the history of money, which is super important to understand. The creation of the central bank and what the central bank does, which is super, super important to understand. And then going into Bitcoin, the gold standard, why the world flourished under a gold standard, and then into the Bitcoin. So he really covered a lot of the really important bases there. And then if you want to know more, you can dig into each subject, but that's a really good book to start with. And then I would also recommend any of the videos on YouTube of Andreas Antonopoulos, and then he's got a couple books, The Internet of Money. They're like, there you go. Isn't that great?
Awesome book. Yeah,
it's great.
Both books.
I mean, he's amazing. So definitely recommend those.
Yeah, and then I read a whole bunch of books on like trading and cryptos and everything. What'd you think of this book, Way of the Turtle? Did you ever read that one?
I haven't read that one.
I thought this was a decent one, or at least what I got from it was basically you just have as long as you're doing something that has a winning return over a long period of time, you just need to be consistent and do it over and over and over and over again. Kind of like casinos, like you can win money at a casino, you can lose money at a casino, but at the end of the day, they're making money, and they just do it consistently over and over and over again. So I kind of got that with like trading, where if you have a reliable way to trade over and over again, that works out pretty well.
Well, and there's one thing I always say over and over, and I say principles are few, methods are many. So there's only a few core principles in life, but there's 1,000 ways or millions of ways to apply them, right? Methods. And so that principle that you just said is super important, and we use that through life too, right? So it's like it's all about your daily habits. And people think like, oh, if I could just do this one big thing, it'll change my life. But the reality is it's a matter of doing small things for a long period of time.
Yeah.
But so that's in life, but also investing. You're right. Like you mentioned Vegas, or casinos, most people show up with $100 trying to win 1,000, but a professional gambler goes with 1,000 to win 100, and he wins 100 every day.
Oh, yeah.
And trading is the same way. Through Signal Profits, we have trading signals, and people come in and in a week or two I'm going to make a bunch of money, but it's a long-term game. You have your wins and losses, but over time, consistently, you just continue to build and build. So consistency over a long period of time is amazing.
Yeah, and then the other book that I was going to share was this one, An Altcoin Trader's Handbook by Nick Patel, because that one he goes into kind of like how he finds some coins to speculate on. But he does a lot of long-term holds in there on stuff. But it was an interesting book that I thought was good. So let's see.
Yeah.
People want to know. David asks, Mark, do you only hold Bitcoin or do you have a favorite altcoin?
No, I get into lots of altcoins. I think I mentioned how there's this global trend of decentralization. Then there's a smaller trend with technology, blockchain technology. Then there's a smaller trend with the U.S. Supreme Court overturning gaming, and now there's an intersection where blockchain technology is getting into gaming. And I think there's some real good investment opportunities there. And so I'm into those. Those aren't Bitcoin, right? But I think the thing is you have to back up, and Randall, you asked me earlier, what is good, or I said, well, what does good mean? And so this coin might be really good for me to hold for the next 6 months for certain reasons, but it may not be a coin that I want to hold for 6 years. Where Bitcoin might be, if you ask what's a good coin to hold for the next 5 years, I'll probably say Bitcoin. If you say what's a good coin to hold for the next 3 months, my answer is going to be different. So yeah, I definitely have altcoins. I like to look at them and think about them for different reasons. And some are shorter time frame. Some are to offset risk, etc.
All right. Alan asks, do you think government where did it go? Government-controlled cryptocurrency could destroy Bitcoin? Like a government cryptocurrency?
I don't think so. Well, first of all, nothing can destroy Bitcoin. So the government could say, if we ever catch you with it, we'll kill you. But they can't shut it down. They can't destroy it. But I think it's kind of ridiculous where the central banks are talking about coming out with their own cryptocurrency, because don't we already have digital money?
Yeah, right.
Get paycheck direct deposited into your account, and you probably use your debit card, and then you wire don't we already have digital money? What difference does it matter if the central bank gives it to us? So really, and that's why I said it's not about what, it's about why. Why Bitcoin? Why is because we want to get away from the central banks and what they do to manipulate and steal our money, right? And so if we just take a cryptocurrency, what good does that do? It's the same thing.
Good point. Yeah, I like that because right now with fractional lending, so banks, they take in $1, they lend out 10, so it just completely dilutes all of our money. But if you have Bitcoin, there's only 21 million or less ever.
Yeah, exactly, and that's the hard sound money, the Austrian economics of it. It's funny how I'm not gonna say it.
No, you totally should.
I was just gonna say, looking at some of these comments, everyone's been so salty, it's everybody wants to know, name a coin that you like, and then you name a coin, and then all of a sudden you're shilling a coin.
Right. Yeah. Yeah, you have no choice. Either you're shilling or you're fudding.
Yeah, right.
Yeah.
You can't win either way. But anyway.
Now, ever since that term came out, that's all it is. Because people want you to talk about coins, and then you talk about coins, and you're just shilling them. But
the XRP hodler says mass adoption equals mass regulation equals complete government control. Crypto decentralization is a pipe dream. I guess that's why your title is the XRP hodler, because it's the most centralized controlled coin. Yeah, I don't agree with that. I think without going too deep, I know we got to wrap it up here in just a couple minutes. I think I think that the government, the education system, the systems that we have, they've kind of brainwashed us to think of money as dollars, like U.S. dollars that come from a central bank.
Mm-hmm.
But that's not what money is. Money is communication of value.
Mm-hmm.
So you have something of value, and I want it, and I say, hey, I'll give you this thing of value. Would you take that? If you accept it, we're communicating value to each other. I say, hey, what if I came over and did physical labor for you for a while? Maybe you would accept that. Now you've accepted my manual labor, right?
Mm-hmm.
Or maybe you'd accept my dollar. So all those things communicate value. And inherently, as kids, we already know this. Like, I have a little kid, and on their playground, they're trading like chips for cookies, or like a sandwich for like soup or whatever, right? Like, they're trading Pokemon cards. And so they're already assigning value to items, and they're freely trading it. But then as we get older and then we start working and paying taxes, we think of money as just like dollars. But even in prison, they're using cigarettes as money, right? So money is what we want, whatever we want it to be. And all it does is communicate value. And I believe that this blockchain technology will tokenize everything, and everything will be assigned value, and we'll just be freely trading it. Everything will be value, and money will still be there, but it will just have a much smaller role, and value will just freely move.
Mm-hmm. Yeah, because all that money really does is it makes it easier to trade value. Like, if I have a bunch of milk, like if I've been lactating like crazy, and and you have I don't know, bicycle parts, okay? And if I wanted to trade milk for bicycle parts, we could do that. But like, let's say for instance, I want to trade it for something different, and all you had were bicycle parts, we wouldn't be able to trade. Whereas money just makes it where we can actually trade, because we're able to have this one thing that we can trade for. But when everything's tokenized,
a medium of exchange.
Yeah. When everything's tokenized, then you can just do it for whatever. RJ says, name some useful subscription services you use and could recommend.
I mean, it just depends on what you want, right? So, like I said, I mean, I have gold ones, I have oil ones, I have like emerging market ones, option ones. It just depends. So, without knowing exactly which one you want, it's hard to say.
Or where could someone find some reliable subscription services?
I mean, again, depending on what it is that you want. I think my favorite is Stansberry Research. You can go to stansberryresearch.com. They have about 15 different newsletters, all specialized in different areas. So I probably have at least 3 or 4 of theirs that I've been subscribed to for a long time. If you want, crypto specific stuff, of course, Signal Profits is what I'd recommend on that front. But I think Stansberry is probably my favorite. They have a pretty wide range of stuff. Harry Dent is pretty good. Boom and Bust. He has like 3 different newsletters that I subscribe to. But yeah, so I could start there.
Okay, awesome. Let's see. Do you have any favorite? So Eddie asks, can you give 1 or 2 of your favorite long-term holds?
Yeah, Bitcoin and Ethereum.
There you go. That is nice. Oh yeah, another thing that we were talking about earlier was how like governments are trying to kind of wheedle their way into cryptocurrency. But I think that's, and with Bitcoin, yeah, sure, they have some ability to do that. But you look at other things with privacy features, stuff like Monero. I mean, Decred is almost like exactly like Bitcoin, and they're working on some privacy things as well. Once that stuff gets in there, then government can't really wheedle their way in there and, pad their fat pockets.
Yeah, I think they're going to try, right? We know they control money, and if they lose control of money, they lose control of everything. So they're going to try with every ounce of their being, and so they're going to try and win, get into everything. I think at the end of the day, money as we know it's going to forever change, and so at the end of the day, they're going to try and control money, but money as we know is going to be changed, and they're going to lose that war. It's kind of like the newspapers, like what the internet did to the newspapers, like. The newspapers have built those walls and trenches, and they've protected the newspapers, and they're still there, but they're just way less relevant today than they were before.
Mm-hmm. Wow. It's going to be crazy. It's going to be crazy.
let's wrap it up on that. I got to get going.
All right. Mark, thank you so much for joining us. It's been a pleasure. You'll have to come back sometime and we can talk some more.
I'd love to. We do it on a regular basis.
All right. Sounds good.
If anybody would have me, and we'll see on the comments if they'd like to have me back. Maybe they hate me after a few of those comments I made, but
no, I think they said good stuff. And I like you after you talked about the XRP stuff. But anyways, where can anyone find you who's looking to find you?
Yeah, I mean, just if you want to know more of like this big picture macroeconomic stuff, like I'm talking about, wealth transfers and allocations, you can just go into my Market Disruptors YouTube channel where I teach a lot of this stuff and give out these guides. If you want to know more specific stuff on trading and investing, go to the link that he has up there on the screen. And I'm on all the social media platforms: Twitter, Instagram, LinkedIn. It's at #1 Mark Moss.
Sweet. Thank you very much, Mark. Peace, 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 peace.
Yeah.
All right.
Thanks for having me, Randall. Appreciate it.
You got it.